Hello there and welcome back to Realty Reckoner. Now that we have understood how to decide which property investment is the best for you, we now have Gulam Zia, Senior Executive Director at Knight Frank India, joining us to speak about how to go about carrying out this transaction of making an investment, financing options available, and also to demystify the smoke about the probably the hottest topic in the market right now, which is investing in REITs. So let's get started with that conversation. And Mr. Zia, thank you so much for joining us on the show. Help us understand what are some factors an investor must keep in mind before locking in on the property. Are there any online tools or platforms that you would recommend for first-time investors to research properties, track market trends, or manage their overall investments?
First of all, to start with, I would suggest a few very basic rules of investment in real estate. Number one is, please understand, real estate asset is very illiquid asset. When you're comparing with other asset classes like gold or even stocks or any other commodities, etc. First thing that all of us should always remember, if we are investing in real estate, it is for long term. It is not something which you can flip overnight like all the other asset classes. People have made mistakes of considering real estate as a flippable asset and have burned their fingers. So number one is that. Number two is you have to also understand that real estate is cyclical. Many of them always want to believe that this is an asset class where the prices will continue to grow and grow and grow forever, which is not the fact. So we need to be very cautious while buying real estate, especially housing. And that's what I would want to believe more than 80-85% of our investors who are actually buying real estate as an asset class buy houses. And for them, it's very important to understand under construction apartments are not very, very good investments to start with if you're not looking into the credibility of the developer. While the most profitable venture of all these, or the profitable asset class or sub-asset class of all of them, is land, because the appreciation of land value is the highest. On the other side, office as an asset class also gives you a recurring income. So if you are actually looking at a long-term investment during which you would have some recurring income, annuity also coming to you, then you should look at office or a shop, because the rate of return there is far better than going for house. The rate of return, annual rate of return, when you're buying a house would be around 3% per annum, whereas for a shop or for an office, it could be 7 to 9%, depending upon what kind of a property it is, where it is located, what kind of demand supply situation. Of course, on the other side, you also have options which have just about started, like a REIT. In fact, even prior to REIT, I would say you could also look at buying shares or stocks of listed real estate entities.
All right, Mr. Zia, you've spoken about REITs, and that's a topic that we will discuss a little later on this show, but also help us understand, once an investor has decided to purchase land or property based on what's fit for him or her, also help our viewers, take our viewers through what comes next in this process. What is the paperwork, the stamp duty cost, some important documents to have handy? Give our viewers some tips to have on hand while making an investment like this.
You have to ask for, the local property tax or anything that has to be pending on that property. You should ask for the receipts. You should also ask for the receipts of utilities like electricity bill or water bill and so on and so forth. Then also, when the transaction is happening, there are two kinds of transaction costs. One, that you're paying to the authorities, which is to the local municipalities, etc., which will happen through stamp duties and so on. On the other side, you have to also pay some transaction cost within the society or condominium. That would be decided by the bylaws of those societies or condominiums. You need to read that very carefully. It's extremely important for you to register the document. The moment you do the transaction, ideally, immediately you should go for registration, because the longer you delay, the longer the chances are of some problem creeping up in your title documents. Now, one more thing that you need to keep in mind is, in many states, there is a discount for female buyers. So if a lady is buying a house, typically there is some concession on the stamp duty that you may also want to make use of. So a lot of those nuances that you should be aware of. So when you are looking at getting it tenanted or hiring someone, letting someone hire that property, take it on leave-in license, you need to also be aware of the different kinds of transactions you can do. Leave-in license is the safest bet because it gives least of the right to the occupier on your property. Taking it on lease or long lease, etc., are very risky, both from the stamp duty perspective, the transaction cost perspective, as well as the rights perspective. So it is the best if you give only on leave-in license on a defined period, typically 11, 22, or 33. Typically 33 months is what is assumed to be safe bet if you're giving it on leave-in license. Even when you have given it on leave-in license, you have to be very cautious that before the period is over, either you get the property vacated, or if at all you want to extend with a contract, do that before this existing contract is over.
All right, Mr. Zia, also help us understand what kind of financing options are available for first-time investors?
Well, if it is financing, you should also keep in mind that the housing finance, HFCs, give it only on buying the houses or even shops. But then, of course, the rate of interest is something which you have to be wary about. Fixed rate of interest or variable rate of interest, these are two different situations. You need to fully understand what is better for you. Please seek the advice of your chartered accountant, somebody who understands the finance better, to get you to advise on what you should do when you're raising a home finance. But HFC is something which is the easiest, because the rates are also varying, but at the moment, while they're very high, but as we believe in times to come, with the Reserve Bank of India most likely bringing the interest rates down, then home loan interest rates will gradually start coming down. The best home loan interest rates I have seen in my career of more than 3 decades was about 6.25% of interest rate, which was about 3 years back. Post-COVID, we had the lowest of the home loan interest rate available. It is now gradually, it has increased because of inflationary trends, and RBI has brought these corrections. But going forward, we see it peaking out and gradually coming down. So if you are a buyer, you want to take a home loan, right now is the right time, because going forward, your EMIs will shrink as the home loan interest rates start coming down. Either your EMIs will shrink or your a number of EMIs remaining will shrink. So this is something which, again, you have to tie up with your bank and understand how it works out. But please understand, when you're buying a land, home loans are not available. So that is when you have to really seek raising loan or raising capital on some other property. Like, for example, if you're buying a land somewhere, you may want to, if your existing house is not already mortgaged or has a loan on it, you may want to take a loan against property on your home and then pay for the land that you're buying. But please understand, you cannot take debt on buying a property on a land.
Okay.
Rest of it, a finished good or a finished property, whether it is a shop or a home, you can take a loan against it.
All right, well, let's finally address the hot topic, and the topic that's perhaps got all real estate investors very interested and hooked onto. And what I'm talking about is REITs, because that is what the rage is about in the market right now. Help us understand what a REIT is, how it works, what is the process of investing in one, and is it recommended for a first-time investor who is unsure of where to park his money in the real estate space? Would you recommend parking money in a REIT?
REIT, the real estate investment trusts, have come up as a new opportunity for investing in real estate. REIT is an opportunity where a trust comes in, run by professionals who get these income generating assets on their portfolio and give you these assets as a trade, stock in trade. So you have all these REITs are then listed on the stock exchange. So you can buy the shares in these REITs like the way you can buy a share in any other commodity or any other organization or a company which is listed on the stock exchanges. Similarly, REITs are also listed. So you can buy shares of those REITs, and those REITs give you dividends. And these dividends are directly out of the money that they collect out of rentals. Now, the returns on the REIT may be lesser than what you would find otherwise if you are buying a shop or an office and renting it yourself. The returns will be better compared to REIT, because obviously, please understand, REITs are run by professionals. So there will be a fee that they will also charge to take this whole proposition for you. So REITs are very, very liquid. So here, the problem of liquidity is also off your shoulder. So this is REIT as such is a better proposition to invest. However, currently there are barely a couple of REITs in the market. 4 or 5 or odd of these REITs are there.
All right, well, that brings us to the end of today's episode of Realty Reckoner. Viewers, we hope the insights shared today have given you a clear path towards your first real estate investment, whether you're eyeing land, apartments, or even REITs. A huge thank you to both our guests for joining us, Mr. Sudhir Pai as well as Mr. Gulam Zia, for their expert advice and valuable perspectives. And thank you to our viewers for tuning in. Until next time, stay informed, invest wisely, and we'll see you soon.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.